Hello, I'm Matt Pierce, Vice President and Senior Portfolio Manager at TrustBank Wealth Management. Welcome to this installment of Chart of the Month. Last year marked the third consecutive year of double-digit returns for U.S. equities, with cumulative gains since 2023 of just over 100%. Investors who stayed the course were rewarded, even through periods of volatility. But while U.S. markets rose more than 17% last year, international stocks did even better. Developed markets returned nearly 32%, and emerging markets about 34%. Historically, U.S. investors have been underweight international stocks for good reason. Since the end of the global financial crisis in 2009, they have underperformed U.S. equities more than 80% of the time, and have never outperformed in back-to-back years. But after last year's surge, the question remains, could that change in 2026? There were several drivers behind international stocks' outperformance last year. Some were rooted in growing uncertainty in the U.S., while others reflected improving fundamentals and opportunity abroad. Lower interest rates and ongoing trade uncertainty contributed to a weaker U.S. dollar, creating a meaningful tailwind for international equities. At the same time, international markets are showing renewed attractiveness, strengthening the case for increasing their allocation across investor portfolios. To start, international stocks have underperformed U.S. equities for an extended period, leaving valuations meaningfully lower, despite expectations for roughly 12% profit growth in 2026. Beyond valuations, international companies tend to pay higher dividends and are increasingly embracing share buybacks, a shareholder-friendly practice long associated with U.S. markets. Finally, heightened geopolitical tensions over the past several years have pushed many countries toward greater fiscal spending, providing additional support for global industries and international equity markets. In March of last year, our investment committee recognized these dynamics and increased our allocation to international equities. More recently, we approved an additional increase, bringing our U.S. and international equity allocations back to benchmark weights. While we don't have a crystal ball to predict which markets will lead in any given year, we rely on fundamental analysis and market expectations to help identify opportunities where they may be emerging. At TrustBank, we've designed strategies to keep our clients well diversified across markets and asset classes. We believe thoughtful diversification is the key to managing risk and uncovering opportunity through all market cycles. If you'd like to explore how this approach can support your goals, we'd love to connect with you. Please contact us today to learn more.